Can I clarify the point about marginal rate corporation tax for income between 50,000 and 250,000? Not sure where this 26.5% rate came from. My understanding was that corporation tax will be either 19% for income below 50,000 and 25% for income above 250,000. Anything in the middle will be at a marginal rate, but I was not clear at what percentage. I thought and hoped it was going to be less than 25%. Is the 26.5% corporation official rate or for any income between 50,000 and 250,000? Great question, pretty technical. Hit us.
So yeah, sadly, it isn't a mistake. That 26.5% rate is a correct rate, but you have to differentiate between the absolute tax rates and what we call the marginal tax rate, which is the rate at which you pay tax on the additional £1, in this case, of profit, okay, for corporation tax. You know, what's that famous phrase about the road to a certain place being paved with good intentions? Problem is, in the tax system, is often HMRC or the government, will try and do something that they think is a good idea, and it will have some unintended consequences. And that's kind of what's happening here, okay? So just as a bit of background, currently there's one corporation tax rate for all companies, and that's 19% on the company's taxable profits. So nice and simple. But because of the, let's say, the state of the public finances, the corporation tax main rate is going to increase to 25% from the 1st of April of this year. Okay, so 1st of April 2023. And that's for companies with profits over £250,000. At the same time, what they did was they carved out and they created something called the small profits rate, which is going to be 19% for all companies with profits of up to 50,000. So up to £50,000 of taxable profit, you're going to pay corporation tax at 19%, just as you are right now. Above 250,000, you're going to be paying this new rate of 25%. So the question was, what would happen to a company who's got profits between those two amounts, so between 50,000 and 250,000? The way they decided to deal with that creates what we call a marginal tax rate, okay? A special type of marginal tax rate here. So the amount of tax that the company pays, you basically work it out by multiplying your profits by the main rate, so 25%, and then deducting something called marginal relief. Okay, so they've created a fraction. Okay, so for the current tax year, or next tax year, when the rate applies, this marginal relief fraction, they've just said is 3 divided by 200. Okay, and you use that fraction to multiply the difference between 250,000 and the actual profits of the company. Okay, so if my profits of the company were, £60,000, you'll be paying less tax overall than you would if you had £240,000. If you work through what happens to the corporation tax figures, and it's a bit difficult, for a podcast to really go through this, so hopefully there's a bit of trust here. But if you work out what happens when you have a profit between £50,000 and £250,000, you work out the absolute tax rate based on their fraction that they've created. You basically find out that the tax rate of earning an extra pound of profit turns out to be 26.5%. It's not an official rate. The official rates are 19% and 25%, but it's a consequence of the mechanism in which the government have created to calculate the tax in between those two profit thresholds. So hopefully you can see the difference between the absolute rates, 19% or 25%, and the marginal rate on that extra pound for those companies in between those two profit thresholds. And it's a little bit like for individuals. So we talk all the time on Medics Money about individuals who've got a salary between £100,000 and £125,140. Technically, the absolute tax rate in that amount of money is 40%. That's the actual official legal tax rate. But because in that salary range or income range, the government begin to withdraw your personal allowance, your marginal tax rate is 60%. So 60%, and nowhere, you'll never find 60% in the legislation anywhere. It's not an official rate of tax, but it's a marginal tax rate because of the consequence of what happens when the government withdraw your personal allowance as your income goes up between 100,000 and 140. Okay, so we are quite obsessed by marginal tax rates, as I'm sure lots of you will be aware. I think we have a whole podcast devoted to it, episode 112, all about it. I'm sure we've got loads of blogs on it, and I pretty mention it every single time I appear in any podcast or YouTube video. Tommy's probably getting sick of it. But it's just really important to know your absolute tax rate and your marginal tax rate may not be the same. And this corporation tax rate is a good example here.
The reason why we're a bit obsessed with it is everyone is being asked to do extra work at the moment. And if you're going to do extra work, you're going to spend extra time at a job that you already work hours and hours and hours at high intensity already. Understand how much you will get in your pocket, okay? Not what the headline rate of pay is, but what you get in your pocket at the end of that shift. Because if you're going to do really hard work in really difficult circumstances on top of an already really long working week, okay, you need to understand it. And if you look at that podcast that Ed mentioned, or the blog article is great. It's got a really technical breakdown of how it works, and even got a nice little pie chart. In that, we show how £100 of, £100 an hour, that is a great rate of pay, okay? But guess what? After marginal tax rate deduction, student loan deduction, national insurance, that £100 in your headline rate just becomes about, I think you said like 17 or 15 pounds in your pocket or less. Okay, thank you so much for interacting on our YouTube channel. If you're not subscribed to the channel, definitely subscribe. It helps us to grow the channel and help more doctors and dentists and nurses and physios and everyone that's writing into us. If you've got any questions, chuck them in the comments section on YouTube and we will do our very best to get to them. Thanks.